Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, you read that right. In this episode, Uncle Frank is bringing the smoke. I'm going to show you what happened, what's coming ahead, what I own, where I own them, and how I'm going to play them all. Your boy is only interested in the next big thing, the disruptors, the new businesses and tech that will create future millionaires. That's it. On your screen is my current speculative portfolio of investments. If you watch this episode carefully, I will outline every catalyst ahead for all of them. This is nothing more or less than Uncle Frank's research on how he plans to win in 2025. From left to right, I'm interested in a new way to travel, EV tolls and electric aviation. Archer Aviation, or ACHR, and Surf Air Mobility, or SRFM. Then there's the quantum computing space, and my three picks are D-Wave, or QBTS, Rigetti, or RGTI, and IonQ, or IonQ. Then I have a long-term play in data centers and digital infrastructure. That's the Global X ETF, DTCR. In the crypto space, I'm long Ripple's XRP and ProShares Bitcoin ETF, BITO. I believe every portfolio should have one monthly payer in it. And last but not least, every good portfolio needs protection to the downside, a hedge. And in this example, I'm going to use the CBOE's VIX. Buckle up, buttercups, because it's about to get hot in the kitchen. Wall Street on Friday slipped to a loss for the holiday-shortened week as sentiment took a hit due to weak economic data. Another Fed Reserve signal that there will be no more interest rate cuts, tariff developments, and weak guidance from U.S. consumer bellwether Walmart. Still, the benchmark S&P 500 did notch its second and third record closes of the year. President Trump continued to garner headlines. On Tuesday, he said he would probably announce 25% tariffs on imports of cars, semiconductors, and pharmaceuticals on April 2nd. Remember that because we're going to add that to our calendar and you could take a screenshot of it. Meanwhile, minutes of the Fed's January meeting showed that policymakers wanted to see further progress on inflation before lowering interest rates. I told you guys to watch that crap, didn't I? I also warned you to watch consumer sentiment from that super lib college in that state. Remember, the media will never give the president credit for anything good he does, like trimming $1 trillion in wasteful spending. They will also never tell you that the whole point to the president's tariffs is they are a negotiating tool to get the country better trade deals. Now, inflation will be in the spotlight next week with the release of the January core Personal Consumption Expenditures Price Index, or PCE, widely seen as the central bank's preferred inflation gauge. That's true. For the week, the S&P 500 lost 1.7%, while the NASDAQ slumped 2.5%, and the blue chip Dow shed 2.5%. Upper left, you could see my folder labeled Indexes Long, and as you might expect, it holds the ETFs of the big indexes I have to watch. I do this so that at a glance I could see exactly what's going on at any moment, or in this example, what happened on Friday. You see, at the bottom, you could see IWM. That's the Russell 2000 ETF. The small caps got the worst of it, down 2.88%. Above that, QQQ, losing 2.08%. That's the NASDAQ. Then DIA, that's the Dow. It lost 1.72%. And then the SPY, the S&P 500 ETF, lost 1.71. Then at the top, I've always got the VIX in there, right? It finished at 1821, up 16.28%. You see why you gotta hedge? Okay, now let's get down to business. The S&P 500 notched two new record highs, but also logged its worst day of the year, all in the same week. The index is now 2.13% below its record close from February 19th and is up 2.46% year to date. The CME Group's FedWatch tool indicates a 92% chance that the Fed Reserve will keep the federal funds rate unchanged at its next meeting in March, all right? So we can expect no help from the Fed. Now let's start the calendar. So there is no Fed meeting this month. The next one will be March 18th and 19th. But just like the past 2 weeks, we have a parade of Fed members out there running their mouths. We have one speaking every day this week except Monday. That makes 3 weeks in a row, and these guys are not helping the market or the president. They just keep repeating they're still worried about inflation. We're not getting any rate cuts, and it's all because of uncertainty surrounding tariffs. Got the message from the Fed loud and clear. That's why I hope we audit these assholes real soon. Tuesday at 10 a.m. Eastern, we have consumer confidence. Now, we have to watch these now because they can skunk the market. If we get a recovery rally on Monday, this thing can ruin the party again on Tuesday. So heads up, I won't be buying any stocks until after this thing comes out on Tuesday. Then after the bell, we'll get AMC's earnings call at 4:15 p.m. Eastern and hear from that shit-stained CEO, Adam Aron. It doesn't matter what the results are because Adam will always intervene for Wall Street over the shareholders. Wednesday, February 26th, is what I'm excited about. Earnings call from Joby and IonQ at 4:05 and then NVIDIA at 4:20. Remember, anything that happens to Joby happens to Archer and vice versa. Those are the front runners. So a good call for Joby is good news for me, an Archer advocate. Why am I excited about NVIDIA's call? Revenue beat estimates 16 times in 17 quarters. Earnings per share beat estimates 15 times in 17 quarters. I'm excited about anything that's connected to quantum computing. And that's why I'm excited about IonQ's call, because revenue beat estimates 12 times in 13 quarters. I want to see if they can do it again. I'm a little less concerned about EPS because this is a growth stock and will probably lose 12 cents, but not one single sell rating on the stock. 80% buy, 20% hold, 0% sell. On Thursday, 8:30 Eastern, we get initial jobless claims and a second reading on GDP. But after the bell at 4:05, we get Archer Aviation's call, the best growth stock I've ever seen. Another stock with no sell recommendation on it from analysts. I will be listening for key milestones. When will the assembly line be finished and operational in Covington, Georgia? What is the target date for the first midnight to roll off that assembly line? Where are we with the FAA on final certification of the midnight? And will certification be contingent on evaluating a midnight that rolls off that assembly line? Will the drama at the FAA have any impact on the final certification of the midnight? Do you see now why Uncle Frank owns the calls expiring Friday the 28th? Just in case they have something explosive to say on Thursday. Guys, as I've been telling you, Archer is not just a manufacturer of flying cars. There's 1,000 companies that can do that. we are bringing a new way to travel to market. We will be the first in the air accepting money from passengers. That takes a lot of work. The company has been very active on X. Here's Adam's post declaring getting started is important. Abu Dhabi is where we'll start. This is a completely new thing, guys. The Midnight will do for New York exactly what the Staten Island Ferry did, provide a new way to get around the Big Apple. You will fly from Manhattan to Newark Airport in 10 minutes instead of driving for what could be hours. The FAA hasn't made a new classification for aircraft in 80 years, and that's exactly what this is. A once-in-an-80-year opportunity, not investment advice or advisor. This past week, Archer received FAA certification to launch its pilot training academy. Archer can now train and qualify pilots as part of its newly launched training academy, with plans to build a pipeline of pilots in preparation for its planned commercial air taxi services. Archer now has received 3 key operational certificates required from the FAA for it to be in a position to begin its air taxi operations when the Midnight receives its type certification. You see, guys, anybody can build a prototype. We are actually launching the business, not just a plane. Yesterday, Raymond James maintained its outperform rating on Archer Aviation, raising its price target to 12. I'm telling you, this company is not just an eVTOL manufacturer. It's going to be a mini airline. It's going to participate in ride-sharing programs, and now it's quickly becoming a defense contractor. It's already delivered its first plane to the U.S. Air Force, and now it's developing a hybrid aircraft with Anduril for the U.S. military. In the comments section, I want you to name another startup with a $6 billion order book and a customer list like this. I'll remind you, this company is basically 40 months old. United Airlines, Southwest, Future Flight Global, JAL, the U.S. Air Force. Go ahead, I'll wait. Normally, I could give 2 shits about what 90% of Wall Street analysts think about my stocks, but at least in this case, they're smart enough not to bet against this technology. Over the past year, 9 ratings and targets for Archer, 78% buy, 22% hold, 0 sell recommendations. Now, I will be attending Canaccord Genuity's Sustainability Virtual Summit that Archer will be presenting at the day before the earnings call. If they leak anything substantial, I will get it out before the call on Thursday. So then Friday the 28th, we'll get personal income and spending along with the entire PCE data group. For my Black Swan watchers, Friday also marks the beginning of Ramadan, so. But now I want to give you a preview of what's coming in March. Unemployment data on the 7th, PPI on the 11th, CPI on the 12th. We might get Rigetti earnings possibly on the 13th, but beginning Monday the 17th and ending Friday the 21st is NVIDIA's annual GTC AI conference in San Jose. Only this year, on Thursday the 20th, it will feature the first ever quantum computing day. All 3 of the quantum stocks I own will be presenting that day. D-Wave, Rigetti, and IonQ. That's why, in addition to the common, Uncle Frank owns the calls that expire Friday the 21st. And yeah, you're right. This could be a nothing burger, or it could be the beginning of the quantum age in America. What I do know is the entire tech world and the people who trade it will be watching. So yeah, I'm long. If that wasn't enough, the Fed will be meeting, promising to do nothing on the 18th and 19th, And this conference will end on a Friday, the 21st, the first quadruple witching date of 2025. Buckle up, Buttercups. Now, here's something I want you guys to know about. This is the kind of thing that could mean nothing or change the entire narrative around, and it's coming out Friday morning of this week from Bloomberg. Fed-favored inflation gauge is set to ease to 7-month low. Now, they mean the PCE. And what's fascinating about this headline is the Fed has made it clear again and again that this is their favored indicator, which also means they may have backed themselves into a corner on cutting interest rates. If this thing comes in ridiculously cool, the entire financial world and federal government will begin demanding rate cuts. The Fed Reserve's preferred inflation metric is expected to cool to the slowest pace since June. The core Personal Consumption Expenditures Price Index, that's PCE, which excludes often volatile food and energy costs, probably rose 2.6% in the year through January in Commerce Department data due on Friday. Overall PCE inflation likely eased on an annual basis as well, according to the median estimate in a Bloomberg survey of economists. So let me paint a picture for you. Let's say NVIDIA kills it on Wednesday, right? Then jobless claims go up on Thursday. Then PCE drops to a 7-month low on Friday. That could be an explosive combination of events and could shift the narrative on rate cuts, or nothing could happen. But I have to point out these possibilities to my subscribers. And for my libertarian subscribers out there, we may finally get our chance to audit the Fed. From Yahoo Finance, Elon Musk won't drop the idea of auditing the Fed, right? And listen to how the Fed responded. Fed chair sees Elon Musk's audit push as a threat to the central bank's existence. You know, if you run a legitimate business and the IRS threatens to audit you, you hand over your books and say, here you go, have at it. What you don't say is, my business will never survive a simple audit. And then 5 hours ago, CNN, of course, jumps in to defend. Elon Musk wants to audit the Fed. Is that a good idea? Something tells me it is. Quantum computing is closer than ever. Everybody's too busy to pay attention. A technology that feels like it's always 5 years away may suddenly be 2 years away. But businesses are a little preoccupied. Listen, guys, I don't know if you want to be part of the next big thing, if you want to find the next NVIDIA, but I do. I was screaming on this channel when Archer Aviation was at $3 per share that it's not just another flying car prototype. It's a new way for people to travel, and it's actually going to happen. That's how I feel about quantum computing. These quantum labs are eventually going to come up with some new tech, and here's the thing. If you're in tech, you can't afford to ignore it. You can't not have it, or you will quickly become obsolete. People are saying this could be a $2 trillion space inside of 10 years. That's 5 years faster than Bitcoin hit that milestone. And I say it will hit that level within the next 5 years. But don't take my word for it, guys. Let's ask AI. What big companies is IonQ working with? IonQ, a quantum computing company, works with the United States Air Force Research Laboratory, Oak Ridge National Laboratory, and Quantum Basel. IonQ also has a partnership with General Dynamics Information Technology. Bill Gates supports IonQ and believes the company has promising prospects. IonQ and NVIDIA are both involved in quantum computing, and their technologies are available through Amazon Bracket. Amazon Bracket provides access to quantum computers from D-Wave, IonQ, and Rigetti. It also offers a simulation environment powered by classical computers. IonQ, Google, and NVIDIA are all working together to advance quantum computing. IonQ is a quantum computing company that uses trapped ions, while Google has a quantum chip called Willow. NVIDIA is helping Google design quantum computing devices. IonQ and NVIDIA have demonstrated an end-to-end application workflow that uses the NVIDIA CUDA-Q platform and IonQ's quantum computing hardware. IonQ quantum computers are available through the Google Cloud Marketplace. Okay, so let me point out a company, IonQ, that's been public for 40 months, is mentioned alongside NVIDIA, Amazon, Google, and General Dynamics. Yeah, you better ignore this one, right? What does AI have to say about Rigetti? Rigetti Computing has partnered with Microsoft, Strangeworks, Horizon Quantum Computing, Fermilab, and the U.S. Air Force Research Lab. And from yesterday, dear Rigetti Computing stock fans, a major military catalyst is just around the corner. Another one not to ignore. You guys want to get in on the ground floor of future giants, right? Hey Google, what about D-Wave? D-Wave Quantum works with many commercial customers, including industry leaders like Volkswagen, MasterCard, and Lockheed Martin. Hey guys, the company's been public for 932 days. You can add to that list Siemens, Unisys, Accenture, BBVA, and NEC Corp. Here's a couple headlines about last week's close. The Dow plunges 750 points as bad economic news piles up fast. Wall Street ends sharply lower on mounting concerns over economy, tariffs. Okay, so how am I playing this next week? Well, I think we have a recovery rally coming on Monday, but I won't do any buying myself until after I see consumer confidence on Tuesday at 10 a.m. Eastern Time. I want to see if that will skunk the market again. Also, if anything crazy happens over the weekend, we could just continue to go down. Now, when we get to Wednesday, all eyes will turn to NVIDIA, but the media already seems to be pushing a new narrative. Why markets may shrug off chipmakers' Q4 results. Magnificent Seven stocks no longer dictate the market. Just one of the stocks outperforming the S&P 500 comes from the Magnificent Seven this year. The 2025 stock market really isn't just about the Mag 7. The stock market's gains have broadened out to start 2025. Bubbly valuations on Mag 7 offer great reminder to investors. NVIDIA earnings aren't make or break for the whole market. The AI harbinger has taken on a different role as other stocks have supplanted the Mag 7. Listen, NVIDIA is still very important. Okay, Uncle Frank's speculative portfolio took an ass whooping on Friday like everyone else. Take a screenshot if you want to. But is this a great opportunity to buy the dip? Not investment advice or advisor. Like I said, I'm expecting a recovery rally on Monday, but won't look at any buying until Tuesday after consumer confidence. This portfolio includes everything except my XRP and some ACHR. I'm long DTCR at 1713. QBTS at 5.66, BITO 2257, IonQ at 37. I'm upside down there. Rigetti, RGTI at 11.07, SRFM at 4 3/8, and in this account, Archer at 8.63. IonQ is the only stock I'm taking a beating on in this particular portfolio, but I feel a little better now that I read this piece from Saturday morning. IonQ's falling short interest ignites speculation. IonQ shares rose 0.34% to 31.85 after hours, with short interest dropping over 13% to 12.30% of float, or 23.65 million shares, signaling reduced bearish pressure compared to peers like D-Wave, Rigetti, and Quantum Computing. According to Dr. Michio Kaku, quantum computers will crack every digital code in existence. Quantum supremacy author Dr. Michio Kaku discusses the future of quantum computing on Making Money with Charles Payne. Guys, you know I will never give you investment advice, but I can say this: do not ignore the quantum computing space. This is coming. It will be here faster than they're leading on. The companies that master and control it will lead tech in the future. Just my take on the matter. From Zero Hedge, Hooters goes tits up as bankruptcy may come within months. Hooters of America is reportedly gearing up for a bankruptcy filing in the coming months as the iconic restaurant chain struggles with declining foot traffic and mounting debt. The Epstein list could drop at any minute. I, for one, would enjoy that. It's sitting on our new Attorney General's desk, Pam Bondi. My prediction is she will leak a little to satisfy the mob, but the rest will be used as leverage in upcoming cases. Just my 2 cents. Grayscale's XRP exchange-traded fund proposal has officially been posted to the Federal Register, officially starting the 240-day clock for the U.S. SEC review process. The countdown began following the SEC's acknowledgement of the filing on February 14th, and the agency now has until October 18th to approve, deny, or extend its evaluation of the application. Coinbase says SEC will drop crypto lawsuit. The end of a court fight with the largest U.S. crypto company would be a big win for an industry that financially backed President Trump. SEC drops investigation into NFT marketplace OpenSea. Well, this seems like a crypto-friendly SEC, but when is someone going to be friendly to XRP? More important dates for you. Ripple has requested a deadline of April 16th to file its response brief to the SEC's appeal. The SEC filed its appeal on January 15th, 2025. The outcome of this appeal could impact how digital assets are regulated and classified in the U.S. Ripple's CEO, Brad Garlinghouse, has called the appeal a rehash of already failed arguments. The original civil penalty against Ripple is $125 million, which is less than the SEC's initial demand of $1 billion. Both parties have been exchanging documents and taking depositions as part of pretrial discovery. Ripple has cross-appealed. Prediction: XRP will soar more than 100% by year's end in 2025. In 2012, a group of developers who eventually founded the financial tech company Ripple created XRP, a digital asset that makes cross-border payments faster and cheaper. XRP is currently the third most valuable cryptocurrency behind Bitcoin and Ethereum. Former Goldman Sachs analyst Dom Kwok wrote earlier this year, there's a high chance that XRP flips Ethereum very soon. As of February 21st, XRP has a market value of $154 billion, and Ethereum has a market cap of $338 billion. That means Kwok's prediction implies that XRP will soar 120% from its current price of 2.66. I see 2 catalysts that could cause XRP's price to double or more in the next year. First, the SEC may dismiss its lawsuit against Ripple in the near future. Second, the SEC may approve spot XRP exchange-traded funds later this year. And that's where I'm at on the matter until I see something else happen. The Fed Reserve Financial Services, or FRFS, has pushed back the rollout of ISO 222 for the Fedwire Fund Service from March to July. That's July 14th for those of you playing the home game. If you guys want some hopium on the XRP case, here it is. Ripple versus SEC. XRP lawyer predicts key resolution timeline. The crypto sector was jubilant on Friday when Coinbase announced that U.S. securities regulators were about to dismiss a legal lawsuit against the crypto exchange. The surprising U-turn by the SEC has sparked various reactions across the crypto community, including the XRP community, which is optimistic about the resolution of the Ripple versus SEC lawsuit, which is now in the appeal stage. In reaction to Coinbase news, former SEC official John Reed Stark predicts that the Ripple appeal is most certainly next in line for dismissal. Along these lines, lawyer and XRP enthusiast Jeremy Hogan believes an earlier resolution is definitely in play, predicting the first half of April or May. In another X response, Hogan stated he was sticking with April on the resolution of the Ripple lawsuit. Hogan, in an earlier tweet, highlighted that the SEC seems to be dealing with crypto litigation as deadlines come up, which means they're dismissing or requesting extensions as a deadline nears. I would agree with this. For Ripple, the next deadline in its case is April 16th, which is why it has not been dealt with yet. Recent discussions in the crypto community have focused on whether the Ripple lawsuit resolution might take a similar path to Coinbase's. Fox Business correspondent Eleanor Terrett weighs in, stating that the Ripple case might be more procedurally complex than Coinbase because of an existing order from Judge Torres at the district level to pay $125 million in penalties. Terrett shared a screenshot of a part of the financial judgment that highlighted that Judge Torres will retain jurisdiction over the case for a year until August 7th to make sure the terms of the order are met. Quote, while the SEC could choose to drop the appeal at the Second Circuit, they would also need to figure out how to approach the district court and possibly come to an agreement on the penalty ruling, reduce or ask to drop, and presumably get Torres's blessing as the presider. Meanwhile, optimism lingers as the SEC makes a never-seen-before kind of radical turnabout in its enforcement policy, according to former SEC official John Reed Stark. The SEC has recently halted 2 crypto appeals and issued 5 enforcement crypto pauses in the last few days. The SEC is also closing its investigation into OpenSea, marking another win for the crypto industry. If you want Uncle Frank's opinion, I think this is all bullshit. I smell a rat. I've been holding this token for longer than Gensler was chair of the SEC. I want to know who told the SEC to bring this case in the first place and why. Was it Gary Gensler's predecessor, Jay Clayton? He was nominated by Trump but resigned on December 23rd. But this headline appeared the day before on December 22nd. SEC charges Ripple and 2 executives with conducting a $1.3 billion unregistered securities offering, right? President Donald Trump on December 28th, 2020, named Commissioner Elad Roisman as acting chairman of the SEC days after the departure of Jay Clayton. So 6 days after they filed. That's all under Trump. January 21st, 2021, President Biden designated Allison Herron Lee as acting chair, and she served until Gary Gensler was sworn in as chair on April 17th. Okay, I've heard enough. I want an investigation. Was SWIFT behind all this? Crypto lobbyists or Wall Street banks? Whose idea was it to single out XRP out of thousands of crypto projects? This case was brought under President Trump's SEC. Why can't I get an answer to this question? Owning this token doesn't mean you have fractional ownership in the company Ripple. That's because it's not a stock. You may earn an airdrop from this token, but it'll never pay you a dividend because it's not a stock. You might stake this token one day and earn interest on it, but it will never pay you interest because it's not a bond. That's all because this thing is not a security and never has been. It's a friggin' currency and should fall under the supervision of the CFTC like all other currencies. What this is all about is power, the power to sanction. XRP is the best cross-border payment option on the planet. But can you impose sanctions on Russia and Iran, right? The way they do with SWIFT? The other reason Gensler and the SEC so desperately want to regulate crypto is so they could run around handing out $100 million fines the way they do on Wall Street. They never remove the bad actors. They just fine them, and then the bad guys like Citadel and Goldman resume cheating and stealing immediately. Until all this gets ironed out, the power to sanction and the power to tax financial companies for breaking securities rules and laws while never actually bringing them to justice. I feel that XRP could cure cancer, and the coin will remain stuck where it's at. Bank of America uses XRP for 100% of internal transactions. 80% of Japanese banks set to embrace XRP for global payments by 2025. U.S. President Donald Trump shared 2 articles about XRP on Truth Social on Tuesday. The articles discuss Ripple CEO Brad Garlinghouse's claims that the company has seen increased hiring and business opportunities in the U.S. since Trump's election victory in November. Now, here's how I know this is bullshit, guys. If you put the name of any other crypto project in place of XRP in any of these headlines, that project would go parabolic instantly. Let's try it out. Donald Trump turns pro Fartcoin, shares Fartcoin reports on Truth Social. That project would go parabolic. It would be up over 1,000%. This project is being manipulated, plain and simple. On your screen is another one of my favorites. That's the daily on Surf Air Mobility, or SRFM, the tiny company that's also the largest commuter airline in the U.S. by scheduled departures. Palantir owns 20.48% of this little company. That's their largest position they have in any company. It closed on Friday at 3.89, down 36 cents or 8.47%. After hours, I got it at 410, up 21 cents or 5.40%. On Valentine's Day, Surf Air Mobility released a new video on strategies to achieve profitability. And from Wednesday, short sellers lose $73 billion amid market rally to start 2025. Short sellers who bet on stock prices to fall have lost $73 billion between U.S. and Canadian markets to start 2025, according to data from S3 Partners. Well, they probably got some relief on Friday, right, guys? S3 uses a model to characterize how squeezable a stock is, with a squeeze score reading over 70, indicating a stock is exposed to a short squeeze, and a reading of 90, signaling the stock is extremely susceptible to a squeeze. Supermicro's reading currently stands at 100, for example. While perhaps the most high profile, Supermicro is far from the only stock that's seen large jumps due to short squeezes thus far this year. Him and Hers Health, symbol HIMS, also has a reading of 100 on S3's squeeze score, while Oklo, OKLO, a popular nuclear AI play, and Big Bear AI, BBAI, are both above 70. All three stocks have rallied 80% or more this year. Now you know who to root for. From the street this weekend, short sellers are closing in on some shocking tech stocks. The bears kicked off 2025 by targeting some of the tech sector's biggest names. One market research firm recently published a report of the most crowded shorted securities in the large, mid, and small cap ranges for January of this year. Hazeltree's new short side crowdedness report shows some unexpected names on the list of short seller favorites. The company states that each list is compiled from Hazeltree's proprietary securities finance platform data, which tracks approximately 15,000 global equities. This recently updated list included names such as Apple, AAPL, server technology company Supermicro or SMCI, and business intelligence software producer MicroStrategy or MSTR. Now guys, try to remember the combination of events that will nail the shorts right in the ass this week. We want an improvement in consumer confidence on Tuesday. Now, this report will come from the Conference Board and not super lib, Trump-hating, blue-haired trans University of Michigan. So there's a chance. NVIDIA needs to kill it on Wednesday. Unemployment claims need to spike on Thursday. That should be easy with all the layoffs in the news. And then PCE needs to super cool on Friday. That little cocktail could put some of the shorts in the hospital for next weekend. Stay tuned. Okay, the last position in my portfolio I'm going to cover is the ETF DTCR. Tech giants plan massive $320 billion AI spend for 2025. America's tech giants could reportedly spend more than $320 billion on AI this year. AI investments by the four biggest tech firms, Amazon, Google, Meta, and Microsoft, jumped 63% last year and will jump again for 2025. Now let's add these headlines to the equation. Trump says Dubai billionaire Hussein Sajwani will invest $20 billion into U.S. data centers, and I hear that number could double. And then from 3 weeks ago, AWS, Meta, Microsoft, NVIDIA, and Oracle, 5 data center deals worth $676 billion announced this month. Guys, if you're going to spend all this money on AI, you're going to need infrastructure and data centers. It's that simple. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. What I can say is there is an ocean of money heading towards this space. On your screen is the Global X Data Center and Digital Infrastructure ETF. I first bought it on January 14th. That's the little white arrow on the bottom. My lowest price was $16.47. My average cost is $17.13 because I keep buying the dips. The thing keeps making new 52-week highs. If there's a big sell-off, I would watch $17.80 to see if it can hold it. That's the horizontal white line on the chart. Friday, DTCR closed at 18.89, down 34 cents or 1.77%. After hours, I have it at 19.48, up 59 cents or 3.10%. Keep an eye on this one. Now, if things work out with this portfolio, Uncle Frank plans to do some real estate investing. Before I show you my research, let me tell you why, with the help of AI, or artificial intelligence. Yes, the United States is facing a housing shortage that is expected to worsen in the coming years. The shortage is due to a lack of new housing construction to meet the needs of a growing population. What's happening? The housing shortage is a complex problem with no easy solution. The shortage is affecting both home buyers and renters. In some cities, people are paying millions for starter homes. About half of renters spend more than 30% of their income on housing. What's causing it? High costs of land, construction materials and capital, high labor costs, building regulations such as minimum lot sizes, parking requirements, and height limits, exclusionary zoning policies. What can be done to increase the supply of affordable housing? Reform zoning practices, provide federal tax incentives and subsidies, and increase the delivery of manufactured homes in rural areas. What's the outlook? The shortage is expected to grow over the next 5 years. New deliveries of affordable housing are expected to plummet starting in 2026. Now, guys, did you notice that the people that are programming AI have a political agenda? Did you notice they didn't mention higher interest rates under the heading of what's causing the lack of new housing construction? Of course, that's omitted because that might help Trump. It might help more people qualify for mortgages. It might ease debt ratios with lower payments on credit cards. The lower mortgage rates are, the more people that can qualify for them. The other problem I have with AI's answer is its first solution is a government solution. Yes, provide federal tax incentives and subsidies. Yes, let's let big government solve the problem. Guys, don't you believe everything AI tells you? So your uncle is a subscriber to this company, Fundrise, and in this ad you could see why it caught my eye. Invest in a better alternative. Build a portfolio of private assets like real estate, private credit, and venture capital. Start investing in less than 5 minutes and with as little as $10. And at the bottom you could see they're highly rated, trusted by more than 2 million people, with good reviews and scores from NerdWallet, Apple, Google, and Investopedia. As opposed to investing in individual rental properties, Uncle Frank wants a portfolio of projects so I could spread my risk and start out small. Now, this is not investment advice. I'm not an investment advisor, and I will never tell you to buy, sell, or hold any security or cryptocurrency, including real estate. But here's one offering from Fundrise that caught my eye. Charlotte NC, 13% fixed return. This recent preferred equity investment of a 335-unit multifamily project in Charlotte, North Carolina, offers an attractive 13% fixed return. This strategic investment through the Income Real Estate Fund leverages the local demand for upscale rental housing and strong sponsor experience with 11,000 units developed across 43 communities. As Charlotte's growth continues, this development will provide residents with premium amenities, including a sky lounge with city views, a resort-style pool, and state-of-the-art fitness facilities. The market advantage? The Charlotte MSA, and especially North Charlotte, have seen impressive growth, with projections of a 7.6% population increase in the coming years. This aligns with our commitment to high-quality credit investments that capitalize on dislocated credit markets. And here's another one of their projects in Spokane Valley. Adding to the income funds portfolio, our preferred equity investment in a new 192-unit multifamily development is positioned to yield a 13.25% annual gross return over an initial 3-year term. This will support the income fund's steady yield, benefiting from a highly experienced sponsor who has completed over 300 multifamily projects across the western U.S. What's next? As rates are set to decrease, we expect this investment's fixed return will become increasingly attractive relative to other income-focused investments. Maybe Uncle Frank will sprinkle a little real estate in the portfolio if things go my way. I'll keep you posted. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.